People who've heard me before know that I think a lot about sentiment. I don't always get it right, but I think about it a lot and I try to figure it out as best I can. And after a rise like we've had in the stock market, investor sentiment and how it may have changed is important. The fact of the matter is, if we just go back to this concept that I've articulated for decades from Sir John Templeton, his classic line that bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. You say to yourself, where kind of are we in that spectrum, and how might you think about that? Well, you don't have to be a genius to know that as this bull market began last fall, September, October, we had pessimism. All kind of predictions of recession, with inflation, with and problems Ukraine, and problems in politics, and what if the election in the fall didn't come out the way you wanted it to, because everybody thinks if the election doesn't come out the way they want it to, it's just going to be terrible. But we've had a lot of history of a lot of elections coming out all kinds of ways, and we know that that isn't really as big a thing as people think it is. And that particular election, midterm election, we know typically is positive for stock markets, regardless of how it comes out. But all that aside, what I said last year is that that bear market led into a period where people were anticipating recession longer than any recession, which to date we haven't gotten, in measured history. And as we haven't had a recession and had a stock market rising, we've had a lot of people sort of digging in their heels and I don't believe this, I don't believe that, I don't believe the other. And yeah, that may be true, but, and this is all, this thing that I've written about at some length, again, for decades, that's a phrase I coined called a pessimism of disbelief, which parallels the wall of worry that bull markets legendarily climb, that parallels the John Templeton phrase, born on pessimism, grow on skepticism, et cetera, where we linger on past the absolute pessimism in the skepticism phase with the yeah buts, and we fight the rise. And we're in that period now. We're past the sheer pessimism. We're past the sheer terror. We're past the point where everyone thinks Putin might run over Ukraine next week. We're past the point where people are ultimately dead afraid of Fed rate hikes or other rate hikes. We've had a lot of them, and the market's higher than it was before they started. And so therefore it can't be as bad as people feared, even though maybe it's bad. It can't be that bad. And then there's the part about inflation, which has been cooling down, and we can debate about that, but. And all the yeah, buts fit into that pessimism, disbelief that the bull market likes to rip through as it climbs the wall of worry that's built in brick after brick after brick of negative things. If we look at this year, at the very beginning of the year, 2023, we had, ooh, my gosh, the Republicans may have won the House, and that may give you gridlock, but Kevin McCarthy won't be able to become Speaker. The Republicans can't figure out how to get a Speaker. This is going to be chaos. Then after this, you get a fear of a few more rate hikes. Then after that, you get to the banking crisis. Remember that banking crisis thing? This is kind of cute because right about now you're seeing second quarter earnings coming out for small and regional banks that were all supposed to be so endangered, and they're coming out nicely, better than expectations. So much for the crisis. This is what I would call a CRY-SIS, and fits into the pessimism of disbelief. And then right after that, we got that whole period, you remember, where people were saying, oh my gosh, Congress, that same Congress they didn't think could get a Speaker of the House, can't put together a budget to pass so that we won't have the government defaulting on its debt, and then we'll have defaulting on its debt and a crisis that goes with that. And there's another CRY-SIS, because we've seen this movie many times before and we know how it ends. And the only thing they do is change the actors and a couple little jokes in the script, and it ended perfectly the way it always does. All brick after brick after brick in the wall of worry. And all in all, it's just another brick in the wall, a la Pink Floyd. Pretty normal, but people can't get over it. And that sentiment remains in this skepticism mode, not the pessimism, not yet to optimism. We got a good ways to go before we get to optimism, but we still have people trying to look for the recession. I think it really is a recession, even though it hadn't been declared a recession, even though it doesn't qualify as a normal, I think, yeah, but. So the reality is, sentiment is consistent with a continued bull market. We're not in pessimism anymore, but we're not anywhere close to optimism. We got a ways to run. In the long term, the market is about economics and reality. And as Ben Graham famously said, in the short term, the market's a voting machine. In the long term, it's a weighing machine. That long term is weighing those real things. In the short term, it's a voting machine, which is more like an election and is really about who do you like, what are you afraid of? It's more about your emotions and sentiment. And that sentiment part is important to focus on. It right now is in a category, regardless of which subsets of it you look at in the marketplace, newsletters, pension plans, retail investors, money managers. It's in the skepticism phase. And with that, you should remember Warren Buffett's famous line that you should be fearful when others are greedy and greedy when others are fearful. And right now, people are not overly greedy, so you should be. Thank you for listening to me. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.